In 1977, a 33-year-old took over a small, forgotten fund with $18 million in it. 13 years later, it held $14 billion. And his single biggest edge? He shopped at the mall. His name is Peter Lynch. And from 1977 to 1990, he ran the Fidelity Magellan Fund to an average return of about 29% a year. To put that in plain terms, $1,000 handed to Lynch on day one would have grown to roughly $28,000 by the time he walked away. He didn't do it with secret algorithms. He did it by paying attention to things you already notice every single day. And the best part, his method needs no Wall Street connections at all. Here's a story Lynch loved to tell. His wife, Carol, came home from the grocery store raving about a new product, Legs Pantyhose, sold in those little plastic eggs right at the checkout counter. Most fund managers would have ignored her. Lynch listened. He researched the maker, a company called Hanes, and bought it. The stock became what he called a six-bagger. It went up 6 times over. He didn't get that idea from a Bloomberg terminal. He got it from his kitchen table. That's the whole philosophy in one word: observation. Lynch believed the average person spots winning companies months, sometimes years, before the analysts do. You see the packed restaurant. You see the product everyone's suddenly buying. You have an edge you're throwing away. And here's the mistake that keeps most people from using it. People love to quote Lynch's line, "Invest in what you know." But most people get it half right. They think it means if you like the coffee, buy the stock. That's not it. Not even close. Lynch meant your everyday knowledge is where you start looking, not where you stop. He found Dunkin' Donuts by drinking their coffee. He found Taco Bell and La Quinta Motorians by using them on the road. But then, he did the homework. He read the balance sheet. He checked the debt. He looked at earnings growth and whether the company could keep expanding. As Lynch himself put it, know what you own, and know why you own it. The noticing is free. The research is the work. Skip the second part, and you're just gambling on a feeling. And once he'd done the work, he sorted every company into simple buckets. That framework is where the real money was made. Lynch gave us a word that stuck: the 10-bagger. A stock that returns 10 times what you paid. Buy at $5, watch it hit 50. And here's why he obsessed over them. In a portfolio of, say, 10 stocks, you don't need to be right on all 10. A few can drop to 0. But one true 10-bagger can carry the entire portfolio on its back. Think about the math. If 9 of your stocks go nowhere but one turns $10,000 into $100,000, you've still won big. Lynch found these giants in boring, overlooked places: auto parts, funeral homes, donut shops. Places the sharp Wall Street crowd thought were beneath them. He famously said he'd rather invest in a business so simple that, in his words, any idiot could run it, because sooner or later, one probably will. But there's one warning Lynch hammered on more than any other. And ignoring it has cost patient investors a fortune. Lynch had a brutal line about market timing. He said something along the lines of, far more money has been lost by investors preparing for corrections, or trying to anticipate them, than has been lost in the corrections themselves. Read that again. The fear of the crash costs more than the crash. He watched people pull out of great companies because they were scared of a downturn that never came or that came and recovered before they got back in. His answer was discipline. Find the good business. Understand it. Then hold on through the noise. Because the biggest returns come from staying invested, not from dancing in and out. Slow, patient, consistent, that's how 18 million became 14 billion. So here's the one idea to carry with you. Peter Lynch's edge wasn't genius, it was attention plus homework. You already walk past a dozen investment ideas every week. The store that's always crowded. The app everyone's downloading. The product your family won't stop talking about. That's your starting line. The winners aren't hiding in some Wall Street report. They're hiding in plain sight in your own life. Your job is to notice them, and then do the work to prove they're real. So let me ask you, what's a product or company you noticed becoming popular long before the news caught on? Drop it in the comments. I read every one. And if this changed how you look at the everyday stuff around you, hit subscribe. We do this every single day. Tomorrow, we're breaking down a mistake that even smart investors fall for again and again. Remember, this is educational content, not financial advice. Always do your own research. See you tomorrow.